Hi students, if you are worried about the company accounts topic, calculation of retained earnings and preparation of financial statements of the company, then see this video till end and you will have a full exposure of a past paper solved and explained. This is question number 5 part C of October November 25 paper 2-3. Let's start. P Limited has provided an extract from their statement of changes in the equity for the year ended 30th June 2024. They have given us an extract. Extract mean the part of something, not the whole of something. Okay, it is showing the balances of these things. Ordinary share capital 230,000, general reserve 16,300, and retained earnings 46,220, and total is 292,520 at this date. Okay, this is what extract of statement of changes in equity. They have given us three totals of these things, three balances of these entities. What? Ordinary share capital, general reserve, and retained earnings. You know very well what are the ordinary share capital means, the money we have collected through selling ordinary shares. General reserve and retained earnings are the undistributed profits. Okay, these are kept with the company to be used later for different purposes in company like growth, expansion, or paying dividends. Ordinary shares, general reserve, and retained earnings are the undistributed profits. Okay, these are kept with the company to be used later for different purposes in company like growth, expansion, or paying dividends later. Okay, these are the reserves. These are the kept in profits, not distributed profit of the company. Okay, these are their balances given. P Limited's profit after interest for the year ended 30th June 2025 was, now this year's profit is given 37,350. After preparing the trial balance 30th June 2025, P Limited's directors decided to transfer 8,000 to the general reserve and to pay an interim dividend to their ordinary shareholders of 36,400. Here directors are have decided, have taken two decisions. First, what are they doing? They are transferring 8,000 to the general reserve. Okay, out of profits or retained earnings, they will transfer 8,000 to the general reserve. Okay, and what other thing they are going to do? They are giving the shareholders and a dividend, interim dividend of 36,400. These two things are going to be done, they have decided. Now they are asking to prepare the retained earning column only. Okay, the retained earnings column only of the statement of changes in equity P Limited for the year ended 30th June 2025. Now, see students, they have given us the format that they have given the heading P Limited statement of changes in equity only retained earnings for the year ended 30th June 2025, and we will see that how to solve this. Now we go to its solution and see how we will solve this retained earning column only. We will start with the given balance, okay, of retained earnings, that is 46 to 20. From where it is coming? It is coming from this given balance. Okay, we will start with this opening balance. Then the profit for the year is added to the retained earnings. Okay, what we started with, retained earnings, and then profit for the year will be added to this. Second, number 3, dividend paid. Now we have the other two things that directors have decided. They are going to pay interim dividend 36,400. That's why it will be subtracted, and you can see the brackets around 36,400, and then transfer to general reserve 8,000. Okay, this is also is going to be subtracted from the retained earnings. That's why you can see the brackets. These two elements are getting subtracted from retained earnings, and then after the calculation we get the closing balance of retained earnings at 30th June 2025, 39,170. This was the part C of this question, where we have to show the statement of changes in equity extract only retained earnings column. Okay, you can see once again you will start with the given balance of retained earnings, then profit for the year will be added, and dividend paid and transfer to general reserve will be subtracted, and we will get the closing balance of retained earnings for the year. Thank you so much. If you have liked this part, please subscribe the channel and press the bell icon so that you can get the explanatory videos of past papers questions in time. Okay, now we move to the next question, where they are asking us to make a statement of financial position. Okay, they have given us this data, and before moving to the solution of statement of financial position, we can see that what elements are given and what are their types. First of all, land and building, it's non-current asset, non-current assets. Okay, and then equipment, same, non-current asset. Then vehicle, also non-current asset. Then they have provided for the provision for depreciation for equipment and vehicles. It means this is the total depreciation of these two non-current assets. Land and buildings provision for depreciation is not given. If not given, no problem, we will not consider it in our solution. Trade payables, it is current liability. Trade receivables, current asset. Okay, other payables, this is also current liability. Provision for doubtful debts, this is about account receivables. Okay, and cash, current asset. And bank overdrawn, current liability. Here many students do this mistake, that they think bank overdrawn or overdraft is also uh, an asset. Okay, so see carefully that in which form bank is given. If it would be simply written bank, then it would be current asset. Otherwise, if it is bank overdraft, bank overdrawn, okay, then it is current liability. And in case sometimes they give right over here that the balance is credit. Sometimes they give this question like this, that 50, they don't write anything over here, they just write bank, and they write 44 credit, the word credit over here, to show that the bank's balance is credit instead of debit. Whenever it has credit balance, it shows that this account is liability now. Then 6% debentures. Debentures are long term loans, this is long term liability. Bank loan is also long term liability. Inventory, current asset. We make three columns. First of all, for non current assets: cost, provision for depreciation, and net book value. Students, remember these three columns are just for this block, non-current assets. Okay, from these blocks only this figures goes for the calculation, for the coming calculations. Okay, only this will be included in the next calculations. Other figures, these two columns will be totaled and they will be closed here. How they are getting closed? They are getting a line, you can see under the figures. These underlines are means these columns are closed. Their figures will not be required anywhere in the coming question. Only this figure, the total net book value of our non-current assets, will be needed in the coming calculations. That's why we have not made a line under this. Okay, now we see that how our non-current assets have been listed in this section. First of all, we were given land and building, and its cost was given, and no provision for depreciation. No was not given. So first we will write its cost here, and we will take it 200 and 205,000 straight to our net book value column, because there was no provision for depreciation was given. Okay, then equipment's cost was given 59,600, and its depreciation was given 11,324. It will be subtracted, and we will get its net book value. For the net book value, we have to subtract provision for depreciation or accumulated depreciations from the cost. Okay, and same for the vehicle, 83,000 minus 23,030. Okay, and we will get 59,970. And then what we will do, we will add up this net book value column. These 1 2 3 figures will be total, and we will have the net book value of our non-current assets. Okay, and after doing the total of these two columns, you will make a line under these figures. Okay, then we start with the current assets. Current assets, inventory comes here. Then trade receivable here. Why here? Because we have to subtract provision for doubtful debts. Okay, this provision for doubtful debt will be subtracted. It is subtracted. They have written here less. Okay, less mean you have to subtract it from trade receivable, and its answer will go here 54,758. And then the last current asset, cash is 2,100, and it is written here. Now we have three current assets: inventory, trade receivables, and cash. Okay, their final answers will be totaled, and their answer will be shifted to the final column here. This is the total of current assets. And then we have to add non-current assets and current assets. Okay, they will be added. They will be added, and we will get the total assets over here, 403,104. This is our total assets. Now we move to the other side of statement of financial position, that is equity and liabilities. In equity, in company's equity, our capital consists of three elements: ordinary share capital, general reserve, and retained earnings. Okay, as you have seen in the statement of financial positions of sole trader, in capital section we write only one figure, that is the capital's balance. Okay, but now in the questions of in the topics of company accounts, where company's data is given, the capital consists of more than one figure. It's ordinary share capital, general reserve, and retained earnings. Ordinary share capital 230,000, we will take it from here. This one, ordinary share capital, given in the upper part where we were asked to make statement of changes in equity extract. See this 230,000. Okay, we will take this 230,000 in the ordinary share capital figure. Then general reserve. General reserves balance was given here 16,300, and here it was decided that 8,000 is to be transferred. Means this 8,000 will also be added into the general reserve. Okay, that's why we will show this addition in the brackets, and we will write here 24,300, 16,300 plus 8,000. This 8,000 that the directors had decided in the current year. Okay, and retained earnings 39,170. Now we have two balances of retained earnings. One, that was the opening balance given in the question, and then the other one that we have calculated in the previous part. This one this one retained earnings, new balance. From here, this new balance will go in the statement of financial position for the retained earnings figure. So we have completed our equity section. It will be totaled, all these figures will be added, and we will get their sum over here, 293,470. After that, liabilities section, First, non-current liabilities. In non-current liabilities, we have two items: debentures and bank loans. Okay, don't confuse over here that 6% debentures. Don't worry about this 6%. Okay, this is the rate of interest on debentures that debenture holders will get interest of 6% of their debentures they hold. Okay, they will be given them as the interest, annual interest. Okay, in the statement of financial position, you don't have to do anything of this 6%. Don't go for any calculations. Most of the students do this mistake. They go for the calculation of this 32,000 multiplied by 6% and they write that value over here. It is not to be done. Okay, take care. Only the figure given, the total figure given of debentures, that is 32,000, will be written. Then bank loan is also non-current liability. We will write here, and their total will be shifted to the last column. And then current liabilities. In current liabilities, we have three items: trade payables, other payables, and bank overdraft. They will be added. Okay, they will be added all, and their some will also be shifted to the last column. And now you can see here, uh, our statement of financial position has two sections, or you can say the two halves. Okay, and you know that, you already know that these two parts have equal answer on both sides. Okay, here our assets equal to liabilities plus capital. Our accounting equation holds here also: assets is equal to liability plus capital. These are asset section, this is capital plus liability section. Okay, here you can see now we have to add up these three capital and liabilities. Okay, 293,470 our equity total, and non-current liability 54,000 non-current liabilities total, and current liabilities total 55,634. And then we get the 403,104. Here the same 403,104, both answers are matching. Okay, uh, it means um, there are chances that we have done the correct work. Many students ask here, sir, if our answer of this section, asset section, does not match with the answer of capital and liability section, then our whole question will go wrong. No, students, there is no such case. If these two answers are not matching, it doesn't mean that your all marks will be deducted. Only the marks where you have written something at some other place, or if you have, for example, you don't write inventory, or you don't you forgot to subtract provision for doubtful debts from trade receivable, only you will only one mark will be deducted from here. Okay, if you write equipment and the whole of this row is correct, okay, you will get its marks. Means all other marks will be rewarded to the students. Only one mark for not coming this these two figures not coming equal, only maximum one mark will be deducted. Okay, you will get the other marks that you have done correct working for. Okay, thank you so much for watching this video, and please subscribe the channel and press the bell icon so that you can have uh, explanatory videos of past paper questions uh, in these difficult topics, so that you can prepare for your examination properly and successfully. Thank you so much. Allah Hafiz.